Hello and welcome to Pro Trader Strategies Market Commentary. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're trying to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We have had some economic data come out today. Retail sales slightly above what was expected. Core PPI, which is Producer Price Index, came in slightly above what we were expecting. University of Michigan consumer sentiment came in a little bit lower than expected. Business inventories went down, probably due to the retail sales and core retail sales going up a little bit. And University of Michigan inflation expectations was relatively in line with expectations. But that overall data really hasn't really affected the market. The overall market overnight was selling off, as you can see right here. Overnight session was selling off before that data came out, and then we've just kind of been stuck in this little area here. Come down, created a value area high and low, and have been bouncing above and below that. Just as I was going on here, we printed new lows in the E-mini S&Ps. They're down about 27. The NASDAQ is also down right on their lows for the most part, down about 28, as you can see here on the chart. And really coming into this value area high, this is going to act as a support. So that should hold a little bit. I don't really see us going much below that, at least today. Monday's a different story, but this should act as a bit of a support here today. But we're going to be doing a webinar today on using puts in replacement for stocks. And the reason why this is such a great strategy, as you can see in the market, when the market's really having these big ranges, it's really hard to use a stop anyway. The New York Stock Exchange is getting rid of that, but it's really hard to use stops because the market has a tendency to push and maybe get you stopped out. People would chase to get back in only to see them get stopped out again. And it really is a very difficult situation. As you can see here, people start to chase it. And then especially in the last couple of weeks, we have a 70 down day and then a 70 up day. Those are the days where people get stopped out when they're using these trailing stops, and the market really gets volatile and those stops get hit. Beauty about puts is in a situation where just within a couple of days you kind of retrace that. Those puts are 100 days out or something. That's what we're going to be looking at. Those puts can go in the money when volatility expands. You can cover those puts and not have that stock taken out of your core portfolio. So that's the beauty of it using the puts, is it acts as a synthetic stop order, and you can actually trade around your core portfolio and not get out of it. So if you've been in, say, Google since it was at 200 at the beginning of the year, and now you're seeing these huge gains, those puts will be very beneficial to you because Google has a tendency to move at a range of like sometimes 50 ticks in a day. So you got to be aware of that. And with a stop, you just would be getting stopped out all the time. So not probably able to capture that full upside. Whereas trading around these puts, you will be able to, if you play your cards right, of course. So the only thing that I've done because of this market being down, as you guys know, I'm overall short deltas in my portfolio. I'm kind of riding this out, and hopefully, that will work out for me. So I haven't done a lot of trades today so far, other than this Adobe trade. Now in Adobe, close to the close yesterday, I did the December 80 puts, and I sold them for 44 cents yesterday, close to the close of the open market session. And then this morning, as you can see, the market came out, opened up quite higher, and I covered those for 10 cents. So that was a nice trade. It was also, it's looking a little bit better today, but I also covered that January 92.5, 95 call spread that I had on for a very small profit, a scratch for all intents and purposes. And I'm kind of glad, or especially yesterday after the announcement, I was really glad that I had covered those because it really popped higher. So, that's why you don't really carry those strategies through these binary events. And I don't like to have those kind of long-term trades on around a binary event. I just made a mistake and overlooked that one, thinking that that the overall earnings season was pretty much over, but Adobe came out a little bit later than everybody else. So that was a nice little trade. As you can see here, it just really spiked higher, made new highs in Adobe. So it's come off since then, but I like to cover those trades early in the morning within the first 15 minutes to a half an hour after the open, and that's what I did with that one. So probably not going to be able to get that good of a premium for it at this point in time. So that's about all I got for you today. Check out Pro Trader Strategies market commentary, Pro Trader Strategies, and get that webinar sent to you guys today. It's going to be a really good one on puts. This is going to be a several part series that we're building out for replacing stops with different types of option strategies that you can use. All right, that's about all I got. And Monday we got the timing research show where I'm going to be doing the roundtable, so please go and check out that. The more the merrier. It's a really fun one. All right, if you can't take that, take it easy.